Simon Derrick now. He's the chief currency strategist at Bank of New York Mellon. Welcome to you, Simon. Let's start out by talking about the euro. How on earth does it remain so resilient when you consider the debt crisis that we're in and the fact that once again you get leaders coming out, Merkel and Sarkozy, and not giving us a solution? There is no answer to what ails the Eurozone project.
I think that is absolutely hitting the nail on the head of the problem we have right now. I think in some ways it actually says an awful lot about the problems on the opposite side of the Atlantic. That actually we have a situation in the United States where they have very few tools left to deal with the weakening in the economy. Literally all they have left now after the debt debate is more monetary policy tools. And unfortunately, if we're going to be talking about extended period of policy weakness within the United States on the monetary side, that simply leads to fresh flows out. And it means there is a need for a lot of the guys in the Far East, the Chinese et al., who are seeing the reserves growing, they need to diversify those reserves. And unfortunately, despite the problems within the Eurozone, it's still the only credible alternative to the US for them. So despite the issues, that's where the money's got to go.
Right, so these guys have got to diversify, which means they've got to buy euros. When you say that this strength in the euro is more of a story of dollar weakness, does that mean that you are anticipating more dollar weakness over the course of the next half a year? Do you see QE3 coming in the States?
I actually do see QE3 coming. I do think it's possibly the only credible outcome to the problems that ail them at the moment. But the timing of that is obviously going to be an issue. I think that dollar weakness, generally speaking, is going to remain the broad story. But within that, particularly if we have this crisis within the Europe growing, and I do think it grows, I do think there comes a point actually where we may in the short term actually see a little bit of dollar strength kick in. But I think in particular, I do not see the strength of the euro against a wide range of currencies continuing much longer than it is at the moment, precisely because we look at what Merkel and Sarkozy came out with last night, and it wasn't a change. You know, it was the same old austerity measures for Italy, for Spain, for Portugal, for Greece. And we know only too well the problems that has already caused. And I think that investors are going to look at that, see that there is no easy way out of this, and I think they are going to ultimately
the euro's headed lower. How much lower and when?
Well, I think that we're probably going to be talking about maybe in a month or two's time. Once we get through the ratification process for the EFSF, once we start getting to this point where we start to see the Treasury auctions for Italy starting to kick in, then I think investors are really going to start to react negatively. So I think this is a start of the fourth quarter story. And I think we're going to be talking about a euro that is down to mid to low 130s easily. But the point being there, of course, is also at the time when relatively the dollar's going to be weak still.
So what is going on in currency markets? I mean, are they functioning properly, or is this an example of hot money really taking over the currency markets? I mean, you have the Swiss government now trying to change its policy based on hot money.
I'd say it's almost the opposite of hot money. I mean, a lot of people are talking about this as being speculative flows. I don't see that at all. What I see is investors desperately trying to find safe havens. This is real money trying to find somewhere where they are not, somewhere where they don't have concerns either the currency is going to be debased or there's going to be a currency at all. And that's exactly the same reasons why gold continues to go from strength to strength, despite the fact that they're actually increasing the margins, and why the Swiss goes from strength to strength, or has gone from strength to strength, precisely because people are looking for that safe haven.
So this is generally a search for a safe place to go, and there really isn't very many places to go.
Precisely. And I think that is exactly why the Swiss National Bank is going to really struggle in terms of putting a peg in place. Because this isn't just about trying to fight speculative flows. This is not just trying to fight against money coming from areas where the currency is being debased. This is about money flowing in from the Eurozone because people are scared about what happens next. And Switzerland's a small country, 7.6 million people compared to 330 million people in the Eurozone.
Right. If the money's flowing in, though, why is the euro still at 144? We'll have to leave that for next time. Simon Derrick, thanks very much.